Hi, there's been a lot of talk lately about silver stackers who bought near the highs, watched the price pull back, and now supposedly regret the whole thing. So in this video, we're going to separate online emotion from real buyer behavior, and you are going to walk away with a much clearer view of whether these people are panicking, holding, or quietly buying more. Today is Tuesday, April 28th in New York, so comment below what day and date you're watching from. Because silver sentiment changes fast, and sometimes the comment section tells a story before the price chart does. And real quick, if you value my content, support the channel by subscribing and commenting John AG Best below. That lets me know you want more grounded market breakdowns. So here's the basic story people keep repeating. Silver ran hard, new buyers jumped in, then silver pulled back, and now everyone who bought high must be desperate to sell. It sounds reasonable on the surface. But when we take it apart piece by piece, it becomes a lot less obvious. Because there are two different markets we have to talk about. There is the emotional market online, where people type comments, argue about price targets, and declare silver dead every time it pulls back. Then there is the physical market, where someone either walks into a shop and sells, or they don't. Those are not the same thing. Someone can be frustrated and still hold. Someone can complain and still buy. Someone can say silver is disappointing and still believe the long-term thesis. So if all we do is read angry comments, we might think the whole market has collapsed psychologically. But if the coin shop behavior is telling a different story, we have to pay attention. And that is exactly where this gets interesting. The shop-level picture described here does not show a giant wave of spike-era buyers rushing back to unload their metal. In fact, some buyers who came in at elevated prices are still adding. Not every buyer. We don't want to pretend everyone is calm and disciplined. But enough buyers are still active that the simple panic narrative doesn't really work. Now let's be honest, if someone bought silver near a big emotional top and then watched it fall, that hurts. Nobody likes being underwater. Nobody likes thinking they could have waited. And there is probably some regret out there. There almost has to be. But regret does not automatically equal selling. This is where a lot of people confuse mood with behavior. The mood online can be terrible while the actual metal stays in people's hands. And that is a huge distinction, because physical silver buyers often think differently from short-term traders. A trader is staring at the next candle. A stacker is thinking about time, savings, purchasing power, and having something tangible outside the financial system. That doesn't make stackers invincible. It just means their reaction time can be slower, calmer, and sometimes more stubborn. Now, according to recent market updates, silver is still being pulled in two directions at once. Industrial use has cooled in some areas, especially where manufacturers try to reduce how much metal they need. But physical investment demand has been expected to recover strongly, especially in coins and bars. So this is not simply a story of hype disappearing and demand vanishing. At the same time, public supply and demand estimates still point to another year of structural deficit, even if the size of that deficit changes from one forecast to another. That matters because it reminds us that silver is not just a YouTube emotion trade, it is also an industrial metal, a monetary metal, and a physical investment product. And this is where the long-term buyer has a different mental framework. If you bought silver because you thought it had to explode next week, then a pullback feels like a betrayal. If you bought because you wanted a long-term hedge, the pullback is annoying, but it is not automatically thesis-breaking. That's the difference. So we have to ask the question that most people skip. Why did these buyers buy in the first place? If they bought because a thumbnail told them this was the last chance ever, that's dangerous. If they bought because 5 posts made them feel late, that's dangerous. If they bought because they wanted overnight wealth, that's dangerous. But if the price move caused them to finally study silver, understand the physical market, and start building a long-term position, then the story changes. Sometimes hype brings people in for the wrong reason, but education keeps them for the right one. And I think that is the part people miss. Some of the buyers who came in late may have started emotionally. But once they had the metal, once they learned the market, once they watched the pullback and didn't run, their mindset may have shifted from chasing to stacking. That doesn't mean their entry was perfect. It means their behavior now matters more than their first reason. And there is a real lesson there. Buying silver is easy. Holding silver through volatility is where you find out what you actually believe. Because silver can humble anybody. It can move violently higher, then punish late buyers. It can sit quiet for months, then suddenly wake up. It can look like the smartest asset in the room one week and the most frustrating asset the next. So when people act like silver is simple, I get cautious. It's not simple. Based on publicly available government data, silver is used across electronics, industrial applications, photovoltaics, coins, metals, bars, jewelry, and other categories. That broad use case is one reason silver attracts both investors and industrial users, but it also means demand can shift from one area to another depending on price and the economy. So when someone says silver is dead, I always want to ask, dead in what sense? Dead because the price pulled back? Dead because comments turned negative? Dead because some buyers got emotional? Those things may be true for sentiment, but they do not erase the uses, the supply constraints, or the physical buying that continues in the background. Now here's the counterpoint, because we need to be fair. Just because people are still holding does not prove they made a great decision. People hold losing positions all the time. Sometimes they hold because they have conviction. Sometimes they hold because they don't want to admit they chased. And sometimes they hold because they don't know what else to do. So we cannot take "they haven't sold" and automatically turn it into "they are smart money." That would be too easy. But we also cannot take angry comments and automatically turn them into "everyone is dumping." That is also too easy. The truth is probably somewhere in the middle. Some buyers are disciplined, some are trapped emotionally, some are averaging down, some are waiting, some would sell if price dropped hard enough, some would buy even more. That messy mix is what real markets look like. And that brings us to FOMO. Fear of missing out was absolutely part of the run. Anytime an asset moves that hard, people start thinking in straight lines. They see price going up, and they imagine it will keep going up. They see other people excited, and they assume those people know something. Then the worst thought shows up. What if I miss it? That one thought can make smart people do rush things. It happened in meme stocks. It happened in crypto. It happened in collectibles. It has happened in real estate. And yes, it can happen in silver. The asset class changes, but human emotion doesn't. The problem is FOMO buyers often confuse momentum with safety. They think because price is moving up, risk has gone down. In reality, risk may have gone up because expectations are stretched, and late buyers are crowded into the same side of the boat. Then when price pulls back, FOMO turns into FUD. The same person who was afraid of missing the upside becomes afraid of holding the downside. The same market that felt urgent now feels broken, and that is why people need a plan before they buy, not after the chart turns against them. Ask yourself this: are you stacking silver to protect wealth over years? Or are you trying to flip it into a quick profit? Are you comfortable holding through a drawdown? Or are you only comfortable when the chart is green? Would you still want the metal if nobody was talking about it online? Those questions matter. If you're successful, share your success story in the comments so others can stay motivated. But don't just share the win. Share the discipline. Share the mistake you avoided. Share the moment you almost chased and didn't. That helps people more than hype ever will. Now let's talk about averaging down, because this is where a lot of newer buyers get confused. Averaging down can be smart, but only if the original thesis is still intact and the position size is reasonable. If you are buying more just because you cannot accept being wrong, that is not strategy. That is pride with a receipt. But if you plan to build over time and a lower price lets you reduce your average without stretching your finances, that can be rational. The difference is whether you are in control. A disciplined stacker buys within a plan. An emotional buyer buys because the red number hurts. Those actions can look identical from the outside, but they are completely different on the inside. And this is why I don't like extreme price predictions. The higher the target and the shorter the timeline, the more emotional pressure it creates. Somebody hears that silver is going to some huge number soon, and suddenly waiting feels impossible. They stop thinking about premiums, savings, debt, cash reserves, and time horizon. They just want in. But nobody knows the exact path. Not the loudest account, not the most confident video, not the person with the biggest chart, not me, not anyone. People can have models, they can have experience, they can have strong arguments, but silver does not owe any of us a schedule, and the platform incentives make this worse. Content that sounds urgent gets attention. Big claims get clicks. Dramatic titles travel faster than calm explanations. That's not a mystery. It's how online attention works. So when you see a message designed to make you feel late, pause for a second and ask, is this helping me think, or is this pushing me to react? That one question can save you money. Another point worth keeping in mind is that silver headlines often mix several different markets together. Futures liquidity, warehouse stocks, coin shop shelves, exchange-traded products, solar demand, and small retail bars can all influence sentiment, but they do not move in perfect lockstep. A tight wholesale market does not always mean your local shop is empty. A soft retail week does not always mean industrial demand vanished. And a scary chart does not always mean physical holders are giving up. That is why we have to be careful with one data point conclusions. The better question is whether multiple signals are pointing in the same direction. Are inventories tightening? Are premiums changing? Are buyers still showing up? Are sellers overwhelming the counter? Are manufacturers still using the metal? When several of those pieces line up, the story becomes stronger. When they conflict, we need humility, not certainty. That is how mature investors think through a volatile market. Now, what happens if silver drops hard again? This is where the market could get very divided. If the drop is slow, people may adjust. They may complain, but they adapt. If the drop is fast, that's different. Fast moves create chaos because they compress emotion. People don't have time to think. They just react. Some would sell because they believe the run is over. Others would buy because they see a discount compared with the recent highs. Same price. Opposite reactions. And the reason is anchoring. Before silver made its big move, many people looked at much lower prices and still ignored it. Why? Because it was boring. It wasn't trending. It wasn't being talked about everywhere. It did not feel urgent. But after people see silver trade far above those old levels, their brain resets. A price that once looked expensive can suddenly look reasonable. A level that once felt impossible can become the new reference point. That does not guarantee buyers are right. It just explains why their behavior changes. This is not unique to silver. In stocks, people ignore a company for years, then chase it after it doubles. In housing, buyers pass on cheaper homes, then rush when prices move higher. In crypto, people call something dead during the quiet phase, then beg for an entry after it explodes. Humans are not always value-seeking. Often, they are attention-seeking. And silver, for all its history and utility, is still traded by humans. That means emotion will always be part of the market. The goal is not to pretend you have no emotion. The goal is to stop emotion from driving the car. So, are stackers who bought high selling everything? From the behavior described here, no, not as a group. Some are still holding. Some are still buying. Some are probably frustrated. Some may regret their timing. But the idea that the whole wave of new buyers vanished after the pullback looks too simple. The better answer is this. The pullback separated tourists from stackers. It exposed who had a plan and who had a headline. It turned excitement into a test, and now the people who remain are showing us something more useful than a comment thread ever could. They are showing behavior. That does not mean silver has to rally tomorrow. It does not mean every dip is safe. It does not mean you should overextend yourself. It simply means the physical market is more resilient than the loudest bearish comments suggest. So if you are buying silver, slow down and be honest. Know your reason. Know your time horizon. Keep cash. Avoid debt. Don't chase panic. Don't worship price targets. And don't let one wild month define a metal that people have valued for centuries. Silver can frustrate you. It can surprise you. It can sit quietly. It can move violently. But if your plan depends on every week feeling good, you don't really have a plan. You have a mood. Thank you for watching. Or subscribe if you want more calm, grounded silver and market breakdowns. And remember, this is for education and perspective only. I'm not telling you what to buy or sell. Use your own judgment, understand your own finances, and talk to a qualified professional before making decisions that could affect your future.